channel. I am live. Okay. I am here. And I'll hit like. Okay. We are live. And oh, come on. I need to go and Tuesday. It should start pulling up. We've got some unbelievable scans. It's going to be a nightmare today, I think, running this freaking thing. Because I think, let me switch over to from Active Trader Pro to Safari. By the way, whoever just joined, this is the stock. Watch this 1 minute stock. From 150, 147. It kind of crept up there, but 140. Let's look at the 2-day. Boom. God, it's up at 160. Keep going. It's going to keep going. CRM is, this is Salesforce, by the way, if you didn't know. Ironic. Scan. CRM is the only one with a cross up on the Dow. So let me put down scans. CRM. Then let's look at brokerage holdings. I do own CRM, so that's going to show up. ARKK, ARKW, AMZN, Snow. Wow. Hey, Zephin, good morning. Are you hearing a loud pitch squeak? You're my audio person on this one. We're gonna scroll down here to the NASDAQ 100. That's gonna have a ton. What the freaking? Oh my God! Oh my freaking God! And look at, see. Let me go over here. We're gonna go Safari View. And I look at the audio and it looks like it's modulating okay. I don't know if you can see this. Let me see. Let me pull this. There you go. And then I want that there. Sources, we're gonna round webcam. We're going to move me. I'll move myself over here. Okay. See in the bottom right there? All those are the... Holy crap. Man, there's just NVIDIA, Skyworks, DocuSign, Fiserv, Illumina, Amazon, Okta. I'm going to put all those in. Is it CEG? What's CEG? Constellation Energy Group. I just changed from them. Oh. CEG. So go over SO and DUK. Constellation Energy Group, by the way. I had to change my gas company yesterday, and they didn't have a good offering for me. Not saying it's a bad thing. God. Everything's green again. I don't have one red. Ugh. And I'm saying ugh because, again, I'm going to bring this up, but my assumption is we want to... Eli Lilly. Yeah, but you know what? I'm not going to bring up Eli Lilly. That one's not going to... TMO, Thermo Fisher. This is a stock. Oof, look at that one. You got some gaps up here. Let me see. TMO. Thermo Fisher. Ooh, they're expensive. I mean, it's best in class, but they're still expensive. I'm not going to bring it up. For you guys, that's not a great one. Let's go into, that was the 100. Let's go into energy. Because if there's an energy, MACD cross up. USA compression. I'm looking, my trash can just came in. Oh. That gap up there. Will it fill that gap? I mean, there's USAC. Let's see. Wow, 11% dividend. $18 price target. It's at 18. Third quarter earnings. September 28th. Let's see when that article came out. Oh. This one was one to get. USAC. We're going to look at that one. That was one to get. Man, look at that stock. Or is this Aramco, AROC, Archrock? No. Valaris. That's enough. Okay, I'm going to go into the strategy tester. Run. This is what I want to see. USAC. Before I start this podcast, 1825. Oh. It's not 10% up, but you've got an 11% dividend yield being paid on October 21st. Okay. I'm going to start this. Why isn't that picture showing up that I took? Single bond ETFs. Why would that not show up? Some bitch. Okay. I'm going to leave that up there. I'm going to take this out. We're going to delete the podcast, move to trash. I'm going to start this up. Good morning. Good morning. Good morning. Jesse, man. I think I need to write you back on Instagram, or I didn't. I just forgot. Okay. I'm not going to ruin that one. I'm going to start by talking about Tesla. We had a MACD cross up on Tesla. 219. Jesse, you got in early. I see the button hook. It just scares the crap out of me. I didn't get in. I probably should have. Okay, let me start the podcast. Let me pull up my notes. And I don't know why that photo's not showing up, but oh well. God, I hate when I do that. Okay. I don't have my water. I should probably get my water. You know what? For an hour, I need my water. I'll be right back. Jim Cramer going over book value of Goldman Sachs, which I was going to bring up. Okay. Good morning. It is October 18th, and you're probably listening to this in the afternoon. Just looking at when people listen to my podcast, I should probably start saying good afternoon. The lifestyle thing I want to bring to you guys today is, if you haven't seen it, I posted it on my Twitter. In fact, let me go to my Twitter, and I'll look this up for you guys, because right on my Twitter there's an AI interview between Bro Jogan and Steve Jobs. And I posted a link to it, the hype beast right there. It's AI powered, and it's a podcast. It's about 20, 30 minutes. It's interesting. It is 100%, and you can tell it's AI driven, but it kind of got me thinking I use Apple Notes here to take notes during the day about things that I hear, things that I see, things that I read, to bring up on the podcast. If I could just type that in, and not even a script, just hey, for instance, I have GS earnings beat and renewed their deal with Apple. Restructuring is growing into new areas like consumer banking. Book value has grown 40% since 2018. BAC up again, $30 remains a pivot. That's just a sample of my notes. It's not in complete sentences, but if I could type that out, throw it into an AI generator, and it creates this podcast, my day would be so much better. Not saying that I don't enjoy this stuff, because I do love looking at charts and stuff, but wow, I liked it. And one thing I did not bring up yesterday, I had it in my notes, and I said it on YouTube Live. Kanye is buying Parler, the kind of, I think you'd call it conservative, no holds barred social platform that blew up in smoke because there was kiddie porn and sexual trafficking and neo-Nazism and everything you can think of on Parler. That Twitter monitors, takes off, does their best to do, but they do a bot problem. But Elon posted yesterday, and it's been taken down. He took it down. A photo of him and with the Twitter logo on his chest, and Kanye with a Parler logo on his chest, high-fiving. I'm not sure what that means, but probably he didn't want to do it because of regulation. Elon's kind of in the crosshairs. Speaking of Elon, I've got the Tesla stock up, and we had a MACD cross up yesterday at 219.61. It is trading $10 higher at 229 right now. Elon posted yesterday he will be on the earnings call, which is tomorrow after the bell. He has said in the past that he will only be on earnings calls when there's a material factor for him to announce. I don't know if this is buyback. I don't know if this is, bad news. I don't know if this is Cybertruck related. If you haven't been watching Sawyer Merritt on Twitter about Tesla, you should subscribe to him. He's probably one of the leading news sources for Tesla, but he's posted videos of the press. Again, Tesla has done a phenomenal job of innovating when it comes to the production of cars. And what they did was they created these presses, and they just created one for the Cybertruck. They have one for the Model 3. They have one for the Model Y, one for the Model S. I don't know if the X is pressed, but the bodies basically are pressed in so that all they're doing is putting the internals in, and it can produce these shells for cars. And the structural pack in the Y and the 3, so the actual battery pack is structurally in the car. So the press allows them to just press these things together. Boom, it happens. So I don't know if there's Cybertruck news, because the assumption is that it's going to start production next year. They've already had some tents up in Texas hiding some things. And Elon has kind of commented on those things as to, not materially, but he's commented wow and things of that sort. So Tesla, it is a buy at 219. Am I getting in? I don't know. I continue to say this rally is not anything other than just a bounce. Yesterday's rally, I think there was one of the reasons why I think yesterday's rally was a short covering is Roblox. Now, Roblox did come out and say that they had 30% increase in users in the month of September. They had a significant increase in the users in September, whereas Meta, Facebook, had 300 active daily users, somewhere in that neighborhood. I listened to a Wall Street Journal YouTube video yesterday. It's basically their tech update. It's like 5 minutes, and if you want to listen to it, it's great. And the tech reporter said she actually strapped on a headset and went through the metaverse, the Facebook's metaverse. And if you don't know what a metaverse is basically these places. Think of it as a bar. And each company, Roblox, Meta, they all set up these areas where you can go and hang out. Well, it means nothing to set it up. It does mean something when you actually bring people in. And she mentioned there were tons and tons of these areas that were set up within Meta that nobody was in. She said she couldn't find anybody. When she did find people, she got constantly harassed. There were some issues with bullying, blah, blah, blah. But she painted this kind of picture of why in the hell would I even want to go in there? So it's interesting. It's Wall Street Journal. Just Google it. It's called Tech Update. You'll find it. It's not a problem. But Roblox, we had a MACD cross up on October 13th. I went over this. I didn't believe that the cross up was there because I said, hey, it's capitulating around here. I would wait for it to get more towards the 30 standpoint, but it never got to 30. On the candle where it got you in at $35, the low is actually $34.11. So it never got down there. But yesterday it popped. And it wound up closing, I think, at 43. Let's see where it is right now because I think it's going to be up again. RBLX is the symbol if you're trying to look this one up. It closed yesterday at 42.61, which was the right about the center of the afternoon candle, which was 42.63. It's at 44.44 right now. So it's up, 5% in pre-market. Make no mistakes about it. This is not making any money. There's a 7% short interest as of September in this one. It's just, here I forgot to switch over to Active Trader Pro so you can see what I'm looking at. But Roblox, and this is the reason why I do think that it's short covering, is just because this is a company that's not making money, that's moving into the metaverse, which, whether you believe Mark Zuckerberg or not, my current belief is that they're similar to what an Amazon was in 2000, and it's just a little too early. So Roblox, they are down 60%, 58% year to date, 44% for over 1 year. They're 69% below their 52-week high. They are 96% above their 52-week low, which was $21, which I think was back in May. It was back in May. So let me see. It was, I'll tell you the exact date, 52-week low, May 10th. 10-day volume is 24 million. 90-day volume is 24 million. That's why I say I think it's short covering because there's no real reason other than maybe the September data that came out on this one. So I would say be careful. One thing that I wanted to bring up too yesterday, there was Bob Pisani had a great interview on CNBC with one of the guys who started what's called a single bond ETF. We kind of went over to TSLQ, some of the other ones, NVIDIA short. By the way, TSLQ, which started here. Remember I told you we had a buy-in on the Tesla stock at 219. Well, TSLQ here, you had a buy-in September 22nd at $37. You're seeing the button hook. You're seeing the button hook down here. That 9-day is moving down. You've got some gaps here about 47. I would sell out if you're in this one at 50. Take your profit because that's quite a move. While I do think that we have more room to go down, I think this particular one could move quick just because Tesla will probably move quick. But single bond ETFs, you get access to treasury bills. And there were 3 of them, TBIL, and they are new. I think they came out sometime last year or sometime earlier this year. Let me see if I can see. No more data. So they came out in August. And TBIL, which is a 3-month treasury bill. And what they do is every time there's an auction for treasury bills, they basically auction them off. Now, Babasani asked a great question. Why would you buy an ETF versus buying the actual treasury bill? Because buying treasury bills and bonds is tough. And you have to hold it. So you do have to hold it through maturity. You can always try and sell it. But again, buying and selling these things is not traditionally great. Sometimes the actual price that your brokerage gives you has some fees in it. The fees on this are 0.15%, which is big. That's a big dollar amount. I do believe that these are tax-free because they're trading in treasury bills. I think this ETF also precludes you from taxes, but check with a tax professional or your brokerage house. Your brokerage house, if you call them, should be able. And by the way, if I am going to, I'll get you the answer if I am going to invest in these. But you can see this one started trading off at about 49. It's up at 49. Let's look at TBIL because I think they do have a dividend. I think they pay off. Yeah. Right now it's a 1% dividend on TBIL. Then there's a UTWO, which is I think that's the and UTEN, which is the 10-year. UTWO is the 2-year. UTEN is the 10-year. These are kind of sliding. I bring them up because, again, if you wanted to get into bonds and things of that sort, you can kind of look into it. I just haven't been steered towards bond, even though, listen, now you're getting 4% on a 2-year treasury bill, which, again, remember, if you buy the 2-year treasury bill, you're not paying federal income taxes. You're not paying capital gains taxes. So there is a significant reason to look at the treasury bills when they get up near 4 and 5%, because they're giving you, when you take the taxes out, you're getting somewhere near 5-6%. So risk-free, essentially risk-free. As long as the U.S. government is backing these things, they are risk-free. Goldman Sachs. I've been talking about Goldman Sachs since it crossed 300. They released earnings, and they're skyrocketing along with other financials. We had the cross up here at 307.74. Let's look at Goldman Sachs in Active Trader Pro. I'll bring this one up because it's moving upwards. They released earnings. 306.71 was where they closed. They are trading at 318 right now. So here's what I got from Goldman Sachs, and I kind of read the notes in telling you about the AI stuff. But they beat across the board, top and bottom. They renewed their deal with Apple. Their restructuring is going to help them grow in new areas, specifically consumer banking. Think about Apple. And he talked about restructuring the deal, the CEO did, because when you think about credit cards, typically credit card companies make money by you holding a balance. You don't want to hold a balance. Again, if you want financial independence, retire early kind of advice, don't hold credit card balances. Sometimes you have to, but just don't. I mean, that interest, oh God, paying that. I will drive 50 miles out of my way to avoid an ATM fee. I am not paying credit card interest fees for things that I don't need. There are times when you may need money. You may fall short and you may need to charge something like your air conditioning going out or your heat being fixed or a plumbing incident, blah, blah, blah. But overall, just don't carry credit card balances. You shouldn't, but that's how they make money. And he talked about with the Apple Card, these are typically higher net worth people who don't carry credit card balances. So he wasn't making any money. So they restructured it a little, and it'll allow them to make a little bit more money. They went over the book value, and I'm going to go over Goldman Sachs book value again. It's 301.88. Their PE is 693, 6.93, 8.10. They have a 3.26% dividend. When we look at, this isn't exactly, but Bank of America has a 10 PE. They have a 2% dividend. JP Morgan has a 9 PE, and it's a 3.45% dividend. Goldman Sachs, I think, is a $350 stock. I think in a healthy economy, this is a $350 stock. Their 52-week range is between 277 and 426. So you're 10% above your 52-week low. You're 28% below your 52-week high. So I do think there's still some room to run here. At 320, I'm getting a little less interested in it because 10% takes you back up to the 350. You are getting a 3% dividend on this one, but I think you're going back to 300 at some point in time. If you want to trade it, I think this is one of those stocks where if you bought it at 320 here, I don't think you're doing yourself any disservice by holding on to it and just kind of, hey, it's going to go back down to 300, but I'm going to get a dividend. This is one where if it does hit 350, take your profits. If it doesn't, you can just hold on to it until it does. That's kind of the way I see Goldman Sachs. I see Bank of America as well. Bank of America is one, I think it was up 6% yesterday. It's crazy. It's got a gap. Yesterday's earnings created a gap between 31, I'd say 31 and 33. You're at 33.63 right now. My guess is that this gap up here at 35 is in play. So I do think even if you bought here at 33.63, let's look at Bank of America real quick and Active Trader Pro. Let's move Active Trader Pro. Active Trader Pro, you're at 34.44. So you are closer to 35. You're closer to filling this gap here at 34.98 to 35.11. That gap right there, there's a little gap above it. You see back here at about 35.32. But I do think you have probably 35 to 36. You do have a 35 handle within realm. Now, here's the thing. See that RSI ticking up? I mean, it just moved up so fast. That MACD is moving up so fast. There's better places to put your money. I think the market's coming back down. That's my take on it. That's where I'll kind of stand on it. J&J moved the market this morning. This is one that I do own personally. They beat on earnings. It is probably going to gap up a little bit. Let me see where J&J is. It is 168 is where it's at, and it closed at 166. So you're going to see a slight gap there. Here's what you can see about J&J. It's been sliding down the entire quarter, down from 176. That 200-day is going to provide some resistance right at 170. This is one that I've held for 15, 20 years. The RSI is up here at 60. I think you could get this in at probably 165, between 160 and 165 at some point in time. I just don't think you have to rush into it. But them beating earnings, again, all of these earnings, they haven't brought down future earnings. They haven't said there's a problem with earnings. They haven't said anything. Lockheed Martin was a defense contractor. LMT is the symbol. They reaffirmed guidance. They boosted share repurchase by $14 billion. They announced that they see 2023 as flat, and they'll move more to growth in 2024. These are providing missiles to Ukraine. These are providing some of the defense stuff to Ukraine. with war kind of heating up, the Biden administration is kind of buying new weapons missiles. So Lockheed also produces the F-15 for the Navy. They did beat their stock it doesn't have a MACD cross up. I probably would wait for a MACD cross up on this one. It might have it in the afternoon, but you're trading. Let's look at LMT and FinViz. Your PE is 22. Your forward PE is 14. You have a 3% dividend. Year to date, you're up 11%. That's because it's war. It's wartime. You're 17% below your 52-week high of 479. You're 22% above your 52-week low of 324. So you're trading right at about 400. Let me see where pre-market has them. And I'll show you kind of the reaction of the stock. Right here is where earnings, you can see in the pre-market. Let's go to, I'll zoom in so you can just see that one candle right there. I think that's 8 o'clock. Active Trader Pro always seems to mess up 8 o'clock for some reason in these low pre-market stock. It closed at 397. You're trading at 399. So it hasn't moved a ton. You've got 1 million daily shares on the 10-day, 1.2 million on the 90-day. You got a 3% yield. There's nothing super exciting about it. I'm not a person who's going to quote unquote support war. So war things are just whatever. I'm not a big fan. But Tesla stock, CRM. There is an activist, and I didn't get his name, but there's an activist where David Faber's actually at the conference right now. And CRM had a MACD cross up, ironically, yesterday at 147. Their earnings are coming up on November 29th. So you don't have a huge catalyst other than this activist. And he's saying, hey, they've undervalued, blah, blah, blah. They haven't monetized correctly. You've got a gap up here at about 152. The big gap up here is just above the 200-day at 176. I don't know that I'd look for it to go up there, but it is up significantly in pre-market. CRM is trading at 155 in the pre-market. That's a big move. It's up 6% in the pre-market. I don't know that this 175 is in the crosshairs, but when you have an activist investor, it could be. My guess is that 168, where the 200-day, would be a little bit of a resistance. Now, here's what you have to know about CRM. I hold a small position in this, so I am slightly biased, but my position is a significantly higher price. Let me see. I'll tell you exactly where I bought it at. But CRM has a PE of 275. I said that right. 275. It is just way, way expensive. Now, I have no problem in knowing that they're going to grow into that. My average cost basis is $220, just to give you an idea. I bought it in this neighborhood around here. I think it was actually about March or so. Let me see. No, I bought it. Let me see. When did I buy it? I'm going to go in tax lots. I bought this 12/2/2020. So if we go back here, I'll show you all of the times I had a chance to actually sell this. 12/2020. So right about here on this candle. Look at the run up that I had. All the way up there to 300 from 220, and I wrote it all the way down. So you guys, somebody, I think D-Man, messaged me last night on the YouTube live from yesterday. God, what's that? That Kevin Bacon where he lost all his money to Bernie Madoff. What's that podcast? Yeah, I need to listen to that too, D-Man. I mean, you're trading. Here's what you have to know too. You're trading today below that. There is no trend that's upward on CRM. The daily, even the daily, downward trend. You go into the 4-hour, it's a downward trend. Do you get into this one? I don't know. I mean, you have to identify your opportunities. So, but there is an activist in it. The algorithm loses you 20% on this. Buying and holding loses you 42% like me. How much have I lost? Let me see. I'm down 17%. So I'm not down as much as buying and holding. And I have beaten the algorithm by just getting in at that point. But it gets you 29 positions. Your average win is 6%. Your average loss is 3%. But again, I don't know. DRV, let's look at DRV. Some of these shorts still hasn't gotten you out. These moving averages are a little high, but see that button hook? I think you're starting to see that MACD cross down. That MACD right there is absolutely in a nosedive. It's just the moving averages that are holding out to not get you out too soon. But I would completely expect this gap here between 41 and 42 to be revisited at some point in time. Maybe not in the near future, but definitely within the next month, I would say. Remember, this is a triple levered movement. So I do think that you have opportunity to get out with a profit if you are in. China was in the news with kind of that Xi kind of being renewed as president, whatever it is. So SOXL, I talked about this one. This is one that has been beaten down. This is a triple levered semiconductor ETF, and it is not one that you want to hold on to. This is not an investment in the semiconductor industry. This is a triple levered bull, meaning SOXL goes long, SOXS goes short. So when the semiconductors are going down, see how this stock is basically been beaten up. Because semis have just been doing crap since January. You started out the year at 60, and you're at $7 right now. There's gaps all the way up, all the way down that haven't been filled. This one got filled, so you would immediately move to this one. This one has not gotten filled up here at 31. You're at $7.36. Now, the RSI is at 35. We made a little button hook yesterday, but there's not an official move yet. I don't know what the 930 candle will hold, but not yet. It hasn't given me the algorithm has not given me a price point as to when to buy this one. You can see the afternoon candle. That little green dot is the afternoon candle. And that is the open was $7.34. The high was $7.40. The low was $7.26. So you didn't move much in the afternoon. Now today, that's going to move a little bit more. Let's go over to Active Trader Pro. And I'll type in SOXS. And the reason I use Active Trader Pro for this one, and not necessarily, these are ones that you day trade. Now, did they have a split, a reverse? What the hell happened here? It might have gone into a reverse split. Let's see. SOXS. Oh, I'm looking up S. Sorry. SOXL is what I want to look at. The short version is 10 times what the long version is trading for. So you can see this is over a 2-day period. We'll just look at this a 1-minute chart. So each candle represents 1 minute. It's been shooting up in pre-market, SOXL, from $7.33 to almost $8. Do I expect this one to go up? Absolutely. I think today that this one will continue to rise. I think you're going to see this one continue to shoot up there. I would expect it to probably break 850 or so. If I knew exactly where it was going, I'd be a lot richer than I am today. But SOXL, I think, is in play now because you're seeing that little leveling off. Last Friday, this is the one. See this one? I mean, it ended higher than it actually opened. It opened at 642. It closed at 797. That was the morning candle on Friday. That's a big move. And then the afternoon candle. I'm sorry, that was Thursday. And then Friday, you just gave it all back. Well, most of it. And then yesterday's move wasn't as big. Just wasn't as big. Let's go over some scans because I do think, oh, you know what I wanted to look at too? Boyle. I know I've been leading you guys down the wrong path on Boyle. It's at 44.28. This one had the MACD cross up here at $53, and the MACD hasn't crossed down. See how this can continue to just continue to move. I mean, it's just been kind of capitulating here, and it kind of lost all of its muster yesterday, and it's starting to cross down. It will get you out. The algorithm will get you out with today's pre-market. Pull up Boyle. Let me see where it's. I'm not going to pull up Active Trader Pro, but Boyle is trading at, and greetings WW. Boyle is trading at 44.11, closed at 44.25 yesterday. It's at 44.11, so it's continuing its road down. The RSI is at 32. Again, you can see that RSI just has been, it's been kind of booming up here. I said here at 57, if you got in at 53, maybe take your profits. The gap down here kind of caused a little bit of an issue. If you're in the 40s, I continue to say that this 87 to 94 is a gap. The problem that you're seeing is that we're in a downward trend. If I go to a daily, I think you're still in a downward trend here. Let's look at the daily. You're starting to turn down. Here's the danger, that 50-day. If that 50-day crosses, if that blue line crosses that red line, the 50-day crosses the 200, it's what's called the death cross, which is a bearish signal. You can see every time it's crossed, it kind of just, it didn't do anything. But this is one that, see, when that blue line crosses, it just starts to pull back up. So it's been using that 200-day as kind of just a guide. But it hasn't moved much from that 200-day. And when I say it hasn't moved much, it's moved quite a bit. I mean, these moves are rather large. If we pull back here, we can see there's a significant volume shelf here at $50, which would be where I would consider this one to move back to. Even at 44, I would consider it to move back to 50. This gap has been filled on the way up. This gap has been filled. This is on a daily, so the gap has been filled. On the 4-hour, the gaps haven't been filled. If we move to a weekly, I haven't gone over TQQQ yet, Jesse. I'll go over that in a little bit. But here's the Boyle. It's just this is one of those decaying assets. So it's the 200 days just going to look like it moves down. You can see back here, the reason in 2018 it traded at $818, it never actually traded there. What these do is a bunch of reverse splits. So when they get down to a certain dollar amount, in order to keep their listing open, they just reverse split it. They don't care about devaluing the stock because these are used to trade. So Boyle, I would think, would continue to go up. I think it's going to touch that 50. But the price of natural gas, you're going into a winter. How can natural gas not go up? I mean, shit. My natural gas that I signed up for yesterday tripled year over year. Okay, with Jesse asking for, before I go into the scans that I got, TQQQ has a MACD cross up here at 1932. Trading at, I think it closed at 1944. Let's look at TQQ on Active Trader Pro. TQQQ is trading at $20.73, so it's up even from here. So if you got in under 20, kudos. It's a strong one. You got another strong day. I'm seeing the ARK's up 3%, CRM's up 5%, DraftKings is up another 4%. J&J is actually down for today. PanW is up 3%. You've got, PayPal's up 3%. Snowflake, I've gone over Snowflake, which is a cross up. But 1932, I would say you see that button hook down here? I see this gap up here at 28, which hasn't been filled. The most recent gap at 20 hasn't been filled. 21 to 21.80. So again, a $20 stock, I think you've got an opportunity here to, if we are going on a run, Guys, we've gone far down. Is this the rally that brings us back to 4,000 on the S&P? If you ask Mike Wilson, who is I think he's from JP Morgan, but he's been calling for this market for the last 10, 15 years, and everybody's been touting, well, he's right. Well, yeah, if you're a constant bear, at some point you're going to be right. I just don't know the positive move that's actually moving this market upwards, because there's continued. And there's somebody backing up in my outside on the street. Sorry about that. But yeah. So TQQQ again, you trade this one, because if I go to let's go to we'll go to a weekly. Oh, actually, this one. Look at this. This is just because the NASDAQ has grown so much. I mean, look at that dip. God. You could have bought this during COVID for $9, and you could have sold it beginning of this year for $81. That's crazy. But today, it's just a decaying asset. You can see we're trading on the bottom side of the Bollinger Bands. At some point, it's got to go up, but that's when you have good news. Target, by the way, 155 pre-market. We didn't have a MACD cross up. In fact, you just got out of target with a 3% loss, but this is one I've held for a long, long time. Okay, scans. We went over CRM. They had a MACD cross up here at 147. Kind of gone over that one. ARK had a MACD cross up. Most likely, this is because of Tesla. ARKK becomes an interesting one when Tesla it's still their largest holding by far. 36.38 is the cross up. It is trading at $38. You've got a gap up here around 38.36 to 38.76. I would assume anything above the 50-day at 39.16, I think that's going to provide. You can clearly see that in the past, that 50-day has provided a resistance level. Back here at the beginning of October, back here at the beginning of September, that blue line has just been once it crossed it back in August 18th, it's just kind of bounced almost at it and just never kind of hit it. But that 50-day, if it breaks through 39 today, I would assume the next resistance level would be 43, which is where the 200-day is at. It hasn't moved tremendously. It was up. Both candles yesterday are green, so it does have some bullish signals on it. And with ARKK, my first kind of voyeur entry into ARK was ARKW. I think I put like 50K into ARKW, and the reason I put it into ARKW is it was the only ETF that actually traded in GBTC, the only ETF that allowed you to trade in Bitcoin. So I didn't want full access to Bitcoin, even though I wound up getting it. But 44.81, and this is the same thing. That 50-day is providing some resistance level. So if you get up near 47, it's trading at 46.40. As you get up to 47, you're going to want to basically look at that one. Sorry. This is why I get water. But the trade on ARKs is right at that 50-day. Until it moves past that 50-day, you can't even look at the 200-day. You can't look at the top part of the Bollinger Bands. I mean, it's just been hugging the bottom of the Bollinger Bands for a while. So ARKK and ARKW came up. Those are the only two that came up on scans. ARKG, I think you're still in. No, you're out of ARKG. It probably will give a cross up today. ARKF, this one's up 3% in the pre-market. You're out of this one, but it probably will give a symbol as well to start the day. Amazon, we had a cross up on Amazon at 113. It doesn't give me a price. It probably will give me a price later today, but it's way up there. It's closed at 113. It's trading at 119. It's up 5% in pre-market. This is a great great stock that you'd hold. I own it. I hold it. I don't sell it. I mean, this is one of those that I've identified as a long-term one. I've ridden it all the way down. We talked about Snowflake. Snowflake had a cross up here at 167. Right now it's trading at 175. I think anything with the 160 handle, you're good. 7. This is one I entered long. I'll probably enter it long here again. I just think their earnings are coming up November 30th. There is no catalyst anytime soon. But I think you've entered into some capitulation here between probably about 150 and 200. And it's a long-term buy. Make no mistake about it. This one is not making money, but their software, their contracts, all of that stuff leads me to believe that this is a great, great long-term buy. They're trading price to sales at 33 times price to sales, but their contracts generally grow over time. They're down 50% year to date. They are 51% above their 52-week low of 110. They are 58% below their 52-week high of 405. So I think it's a good entry point. But again, I'm looking at this one as a buy and hold, not as a trade. I've kind of gone over it in the past where I've said, hey, I could have gotten out at 200 when I bought it before the earnings at 183, and then it dipped all the way down to the 120s. Didn't buy more, didn't sell more. I'm just kind of happy with my entry price there. NVIDIA had a cross up. This one is the most expensive chip at 118. They're trading at 124. Market just opened. They're trading at 124. I'm not a big fan of this one, and the reason is if we go over here and we type in NVIDIA, the PE is 38. I still think that needs to come down to the 20s. They're only 9% above their 52-week low, which is 108. I think you get it around 110 at some point in time. When you look at AMD, their PE is 24, significantly less. They're 6% above their 52-week high, 52-week low. So all of these have been taken down. The one that I like the best is Qualcomm. Their PE is 9. They have a 2.69% dividend. They're only 6% above their 52-week low. So, and Qualcomm had a cross-up, I think a couple of days ago. I went over this one. Oh, no, you're out. Qualcomm will probably get one today. But NVIDIA, Skyworks. I've gone over this one. This one makes some components for the SWKS. They make some components for the iPhone and mobile phones. And sorry about the garbage truck back there, but $81.84. It's trading at $84. So it's up from where the algorithm got you, supposedly got you in. This is a decent one. I just honestly buy Apple. Why buy Skyworks? Just buy Apple. Apple had a cross up at 141. You'll probably get Apple again at 140. So, just buy Apple. DocuSign. This is Kathy Wood's favorite. This is still expensive. $46.16 is the price that the algorithm gets you in at. Their earnings are coming up December 1st. There's no real catalyst. This is just an oversold bounce in my mind at $46.16. There was no news. This is just one that's been beaten up, so it gets down. They're not making money. Their forward PE is 24. Their price to sales is 4.16. There's no dividend. They're 70% down. They're 10% above their 52-week low. 52-week low is 42.13. There's no real reason to buy this one. Again, it came up as a scan. I don't know that you want to buy it, but if you want to be Kathy Woods and you want to buy it, go ahead. That's where this one came up on, was the ARC scans, which one crossed up on the ARCs. Fiserv is an interesting one, and I'll kind of go over this one because the earnings are coming up October 27th. They just had a 96.66 on October 4th, which got you out for a loss. You could have had a nice gain on this one, 4, 5, 6%. The current cross up is at 97.37. They're trading at 98.92, but there's a gap up here at about 109. And with their earnings coming up, it's interesting because the algorithm loses you 8%. Buying and holding this one loses you 3%. There are 27 positions in the algorithm over 1,000 candles. 74% are losses, 26% wins. but your average win is 8%. So it gets close to that average win of 10% that I like. Now, here's what you have to know. Their PE is 31, so they're significantly expensive. What do you ask Fiserv is? Their payment and financial services technology. It basically provides financial services. Year to date, it's down 6%, so it is greatly outperforming the S&P. It is 11% above its 52-week low. It's 12% below its 52-week high. So its 52-week high is 111. It's trading right now at 98. So I think you could ride this one with all of the bank earnings coming out, and they're good. What makes me think Fiserv won't be good? I think it will be. So I like this one, and that's why I kind of put it in there. Illumina. I think this is Illumina. ILMN. This is a genomics company, if I'm not mistaken. Let me look real quick. ILMN. Let me not mistake this one. They are not making money. They provide sequencing and array-based solutions for genetic and genomic analysis. I was 100% right. Price to sales, 7. This is one that is 19% above its 52-week low. It's 51% below its 52-week high. It trades between 173 and 428. 173 was back here. It looks like in June. It has had multiple bottoms, and the multiple bottoms are right around 180 or so. Illumina's price, kind of the price in the algorithm, 207.02. This one, the algorithm loses you 27%. Buying and holding loses you 35%. Your average win is 10%. Your wins are only 24%. I like this one. If you listen to Kathy Woods, she's a big fan of this stock. Their earnings are coming up November 3rd. So I liked it. Another one that came up with a cross-up is Constellation. This ties into my gas at home. I had Constellation. My contract ended, I think it's September. Called up yesterday, didn't get a good offer. It was their price per therm was a little bit higher than everybody else's. Everybody else was offering me between $50 and $100 to become a new customer. It is simply going online and signing up. I called Constellation. They didn't have a better offer, so I went with Gas South. But Constellation has a price cross up at 85.15. There are multiple gaps on the way down. You're near a 52-week high on this one. The ones that we went over for the past 2 days, Southern Company, you have some gaps up here, which could provide an opportunity. So I like Southern Company. You've got this button hook at $64.65. You're trading at $65. Duke Energy, you've got gaps up. These are both utilities. And Constellation, it's probably utility as well considered. 88.89 is the buy. You're only $2 above at 90.56. I think this one travels up towards that 50-day at 97. And again, I didn't see anything other than the fact that these are utilities. Constellation, their symbol is CEG. Southern Company is SO, and Duke Energy is DUK. Constellation, their PE is 43. The price targets are $98. Right now it's trading at 85. So sells electricity in the U.S. It's expensive. It's just super, super expensive. Another one that came up, and this one was interesting, USAC. This was the only one that I took out of the energy scan that I did. And the reason I took it out, $18.25 here. That's the cross up. You've got next dividend date coming up on October 21st. So you have to buy it by October 20th, today or tomorrow, or Thursday. You have to buy it one of those days. Their earnings are coming out October 31st. Now, this one trades obviously in a range. There's a gap up here at 19. You're trading at 18.29 right now. USAC is it. Now, here's why I picked it. You've got that dividend coming up. Look at the dividend yield. 11.52%. Year to date, this one's performing 4%. The latest coverage is from Mizuho, and that's $18. Most of the others have them below $18, which is where they're trading. There's an Insider Monkey article, 10 very high yield dividend stocks to check out. September 28th. Go to FinViz and look at it, because if we go back here and we look at September 28th, there was a MACD cross up here at 1735. You're right here at 1825, right before the dividend. Now the dividend's going to get taken out of the stock. You can see what happens here is the dividend just takes it out of the stock and goes down. If we bring this back to about the high, well, you know what? I'm going to bring it back to the last time, the gap here. And you can see it's provided some volume shelf support right here at about 1808. So you don't have much downside. I would expect that 1808, $11, say $11. $11 is probably your support level for where the dividend will be paid out. So whatever you think the dividend is, 11.1% divided by 4, I think it pays it out quarterly. Do a little bit of research, but that's why I brought it up. So, okay, Cameron wants me to look at XOM. I own XOM. It is up 1.4% in the pre-market. You still have support. See, it's above that. So this green day is 9-day, and it's got a candle. Both of yesterday's candles are above that 9-day, which are good. It's got this gap up here. Again, I would probably be looking for a 104, 105 as a top. It's at 102.09. I don't think there's much more. I particularly may be looking to trim this. In particular, I don't see it. Their earnings are coming out. That's the only thing that's making me hang on, is because their earnings, they might announce a huge buyback. They might announce a special dividend. They might announce something huge that drives this stock up past the 105 with a 52-week. Let's look at XOM over here. The 52-week high is 105.57. So you're pressing right up against that. If you're looking to get into XOM, Cameron, I probably wouldn't get in now because you're rolling dice. I mean, you really are. It's 11 PE. Let's look at CVX as another one. You're at a 10 PE. And this one's 11% off its 52-week high. They give about the same dividend. This one has year-to-date 37%. Year-to-date XOM has 64%. So I do think that you have more room on CVX if you were look to get in now. But if I were particularly looking to get in right now, look at Venom Energy. Don't give me the ad experience. 10% dividend, 49% year-to-date. It's 11% off. It's 52-week high. Take a look at FANG, which is a 2% dividend. This one's 12% off. It's 52-week high. Even look at Devon Energy. This is a PE of 8. It's got a 7% dividend. It's 10% off its 52-week high. There are plenty of other, if you haven't been in this one. Now, if you're in it, remember how I say always take profits? I'm not great at that, especially with this one. I mean, I think I bought in the 40s. Let me see. I'll tell you exactly where I bought. XOM, it's going to give me all kinds of... I reinvest my dividends, by the way, just so you're aware. I bought June 17th, 2020 at $47.24, and it went down from there. My average purchase price is $48.96 because I've been buying on the way up. So I'm in there. Cameron, listen, I can't blame you. It's got support, but it's right up near the highs. If I were you, Cameron, I'd probably put in a sell order at 104. If it hits 104 today, great. You're near the 52-week high. If it doesn't, you're still in it. And I don't think that, energy should. Here's what I know about energy. I was looking at it today. It should have gone down. It should have absolutely gone down. Biden announced he's taking more out of the strategic oil reserves, and that happens today. That was well known. It's not something new. It's not an announcement, but shit like that hits the news, and it should go down. But energy's up. I think you've got a supply and demand issue. I think that's it. I think XOM, you've gotten your dividend. Well, you didn't get your dividend because you got out. You got in just last week. XOM, I would tell you, if it gets into the 80s, if you get an 8 handle on this one, this is a buy and hold, because I don't think you're going down. Just like with CVX, if you get under 160, I think it's a buy and hold. You're at 161. I consider that one. The only thing that scares me about CVX is this gap down here at 144. Other than that, I wouldn't be scared to stay in this one. So, okay, I'm gonna hang out on YouTube Live a little bit, but I'm gonna close the podcast. It's been about an hour. So, if you have any questions, hit me up on the socials. There's links down below. If you have any comments, questions, concerns, blah blah blah, the whole thing, just hit me up. I posted yesterday on Twitter too. The episode I did with Rick, with a woman from Vice News as well. So if you have any questions, hit me up. Take care. See you guys. Okay, share. Export song to disk. Export. And man, I don't know if you guys can hear it, but it looks like there's a sod delivery or something next door. Hold on, I'm going to look. Let me go look. Looks like to do Division 7 supply. I don't know what the hell they're delivering. They're delivering something. And sorry about all the noise. Cameron, I don't blame you for getting out of Exxon. Let's see how Exxon is trading. I'll go to Active Trader Pro. We'll look at Exxon. Look, by the way, look at TQQQ. This is amazing. Should have bought it at 18 yesterday. I saw it right at the beginning of the day yesterday, but who could have predicted this one? Wow. Bob Bassani's going over the sectors. Let's look at XOM. This is what I expected to see from XOM. Big up, big down. I think you're getting... T. Rowe Price? Yeah, let me look. T. Rowe. I always think of T. Rowe as someone saying hero. T. Rowe. Oh, okay. Am I on? Yeah, I'm on Active Trader. I'm on TrendSpider. Wow. I don't know that I like this one. I've never been a big fan of T. Rowe. Let me look at their... Here's what I'll... T. Rowe Price, I think they mainly make their off of asset management. 4.67% dividend. Their book value is 39. They're trading at 106. 47% down year to date. Cameron, good trade, I think. Just be careful, Cameron, man. I know you're young. You want to buy and hold a lot. You don't want to take your profits a lot. Something like Exxon, something like energy, get in. Just get out when, selling into this stuff. T. Rowe. Here's what I'd say about T. Rowe. Look at the book value. So you're at 39. Okay? But you're trading at 106. Goldman Sachs, Your book value is 301. You're trading at 320. I still don't know that I'd love Goldman Sachs at 320. You got your 10% because I think you're going to 350, but financials are going to lead. As interest rates go up, these guys are going to, and specifically Goldman Sachs going to get into consumer stuff. But look at T. Rowe. It's been a falling knife. Here, let's look at Stefan, you're looking at T. Rowe as a long-term or short-term? Because look at the long-term. I mean, even the long-term. This is a weekly. It crossed that 200-day in 2022 at 140. You got no support down here. There's nothing. Stay away from T. Rowe Price. Again, I'd rather see you in XLF. And I know I talked to you guys about fees and stuff like that in these ETFs. 31.45. You're only at 32.44. But take a look at that. Remember that T. Rowe on the weekly? Look at the XLF. It's just crossing that 200. It's going to use that 200 as support, like it did back here in 2018 during the financial crisis. It's going to use that as support, and we're going to see it start to go up. I think you're still going to see the market go down, but I think financials will be okay because they're going to be able to charge. So check your savings account. If you guys have a savings account, check your savings account. What are you getting? Less than 1%? But you know what? Those guys are today buying treasuries at 4%. So they're using your money to buy treasury bonds to make them money, and it's 4%. So that's how banks work. And by the way, Cameron, good trade at 102. It's down to 101.37. But rather than T. Rowe Price 7, XLF. Buy and hold XLF. That's what I'd tell you. Don't trade it. Just buy it. Because you can see from a weekly standpoint, you're getting it right below this Bollinger Band. If you really want 30 is right where 31 is right where the 200-day is. That'd be a better entry point. I don't know that you're necessarily going to get it. You're right in the middle here. Wow. XLF has moved 2% in this period already. Let me make sure. Yeah, long term. XLF's effing. Don't do T. Rowe Price. Unless there's some type of insider information like your dad's the CEO or something and he knows something. I'm up 2.29%. God, man, I hate Active Trader Pro. Just messes up all the time. I got to restart it. Let's go back into Active Trader Pro. The markets are up. The NASDAQ is up 2.18, which is leading the way. I am up 2.4. So I'm beating all the indices today. That's when you know you're good, by the way. And if you guys don't do that with your own portfolio, you're freaking crazy. You need to track your portfolio against one of the indices and align yourself. So I traditionally, for the last, I'd say 15 years, have aligned myself with the NASDAQ. And that was where I was at. The beginning of this year, Jesse, man, you're killing it. High five. The beginning of this year, I kind of moved, and it's because I'm 52. You guys, I think most of you guys watching and listening are younger than I am. But at 52, I need to move into a little more safe. And when I say safety, it's not like I'm getting out of stocks. I'm not moving into bonds. That's probably when I become 70. But there's a mindset that I've had to get myself into. And the mindset is I can't gamble my money because I have to make sure that I save my money. And so at the beginning of this year, I was like, okay, I need to move more towards the S&P 500. I didn't get rid of my Apple, kept my Apple. But I took some money out of the ARK funds. I took some money out of some of the more speculative areas. And I said, okay, I'm going to sell this. I didn't take it all out. Obviously, I still have Shopify. Like you guys know, I think it's a $70 average price buy-in. And now I'm at 1.98, by the way. So the markets have taken a dip down. Let's look at, it might be time to look at SQQQ on a daily. Ooh, look at that. Boy, you've got confirmation here. I got to tell you, this is a strong move, but it's too fast. So here, this is a 1 minute chart. And see, you're outside the Bollinger Bands. This one's going to come back down, which would tell me go back into TQQ. Look at that MACD. There's a 1 minute chart. So it's going to move quick. And those moves aren't huge, but it's going to move quick. Here's a 5 minute chart. And we'll zoom in here so we can look at it a little bit more closely. So again, 5 minutes trading outside the Bollinger Bands, which means that TQQQ is going to move. That RSI down there, it was at 65. See how it bounced off that 70 and moved down. So, nah. Let me look at T-Row again for you. Hold on, I'll switch back. Or no. Oh, man. I had you guys on this one. See, okay. I was on Active Trader Pro. Hold on, I got to get out of here so I can see. Usually what I do when I'm with you guys is I save that one and then I move this down here so I can see it. So here's what I was talking about with SQQQ. See, those two, this is a 5 minute chart, and you're outside on top of those Bollinger Bands. It needs to come back inside those Bollinger Bands, but see how it's expanding? It's going to continue to push up, which would tell me, hey, I want to get into TQQQ for a short-term trade. If you're looking at a 1 minute, I think it's going to be, see, you're outside those Bollinger Bands still. 1 minute chart. You came back inside of it. So now I'd say, okay, it's stabilizing. I don't want to do anything. I'm going to kind of just sit here and wait for the Bollinger Bands to sync up a little bit. But SQQ is down 5% today. Okay, let's switch back to Safari, and we'll go back to T-Row for you, Zephin. Your dad's safe. Your dad's not playing it like you're younger. Your dad's playing it. And that's the problem with a lot of the custodian accounts. I had a custodian account too, and my dad played it safe for me because he didn't want me losing money. He didn't want me gambling money. Second I had that account, man, it's all go all in on Cisco. And I think it was like 1989, 1990, somewhere in that neighborhood. 1988, I turned 18, but I don't think I had remember, those were the days where you had to pay $25 per trade, and I maybe had $700 in my account. So $25 per trade was just an amazing amount, and I would throw all my money on Cisco and stuff. 104. I don't think you want to sell right here. And this is what I'll tell you, Zephin. You're going to have a MACD cross up right here. So I think you're going to have a bullish move. And specifically in financials, I think you're going to have a bullish move. But I'd probably take that 104. And if you hit 110 because that gap is up here, I'd probably take it. You know, if you really are certain that you don't want to stay in T-Row price, and I'd probably tell you, the difference between 104 and 110, if you say you have 10 shares, 104 and 110, that's $60. Big freaking deal. You take that money, it's $1,000, throw it into something like Tesla. Yeah. I mean, trade Snowflake. You know what you do, Zephin? You're young. Freaking take that T-Row. Throw it into Snowflake. I think Snowflake at this 1.6, get 1.6 handle. 1.6 something, 1.68, 1.69 something, a 1.6 handle on Snowflake. Sit there and hold it. That's your T. Rowe Price. At 33, Jesse, the 40-40-20. I've always abided by the 40-40-20, no matter what age you are. And I've abided by that. I haven't always followed it. And the reason I haven't always followed it is because of market conditions. Today, you're in a market condition where that 40-40-20 absolutely 100% works because you're really just riding this out. And there was a great discussion with the Goldman Sachs CEO this morning about, was it Druckenmiller? Somebody said, I think it was Druckenmiller, said he thinks that the market indices, the S&P, that we won't see new highs, for 10 years. And the S&P, here. So if he doesn't think we're going to see new highs for 10 years, remember SPY trades up to it's up at 479. So let's look at SPY. We'll look at a monthly of SPY because I'll show you. Some people may say that's crazy, that no, it won't happen. Well, it's happened in my lifetime a couple of times where it took 10 years. So this is SPY, okay? Here is, 1999. You were at, 143? Kept going down. I mean, that's 3 years right there. Look at those 3 years. This is monthly. You didn't make money during those 3 years. And then it took you another 4 years to get back to where you purchased over here. So it took you 4 years. And then what happens? The financial crisis happens. Boom. You're back down. Even if you bought at the low here and you're like, God, I timed this so well. And I bought at 81 and I nearly doubled my money. Well, you know what? You're back down at 81 in March 2009. So 2 years later, you're all the way down. So there you go. And then, you've moved up here. So do I think that it's possible that we have right here, January 2022, right here, and then we have another 3 years, which brings us out to 2025. Let's say January 2025. Let's say 3 years. If we continue to go down, the SPY is just probably at 304. Maybe that volume shelf right there at 282. And remember, I just brought it back to this is SPY back at 2008. So those volume shelves on the right are just, all the way back to 2008. So there's a volume shelf of people holding at 284. It's trading at 373 right now. And this is a monthly chart, so you use it, take it with it for what it's worth. But when we've broken that 50-day, you can see the last time we really broke that 50-day was the financial crisis. And then we broke it in the COVID. And now we're starting to break it here. So do we have more room down? Probably. I mean, you can't take a $7 trillion economy, inject $3 trillion of new spending into it, have this run up from 2020 to there. I mean, we didn't even triple. But now what they're doing is they're taking money out of the system. So you're tightening. And so that's going to cause either, economics just tells me this. Your rich will get richer. Your poor will stay poorer. And it's an unfortunate cycle, and it's the way the economies work, and it's ugly. But, by the way, that brings me to my next point, which is get the F out and vote. I don't care if you vote against all of my stances. I could care less. My politics don't matter. The market is the market. But for your own well-being, get out and vote. I talked to Rick. I think it was last week. I'm doing another one with him at 3:00 today. But last week, Rick is the former director of elections for Fulton County here in Georgia, which was a pivotal county in the 2020 elections. And Trump still has his eye on Rick and all the corruption that he says happened. FYI, there was no corruption that happened. There was nothing wrong. Nothing was done wrong. Nothing was done, behind the scenes or anything. It's crazy to think that people still think. And Stacey Abrams last night finally admitted that she lost the election. Then she comes back and says she won the election in the same debate. F you. So my politics don't matter. Just get out there and vote. 60% of the people vote. And that's national elections. I think Rick said they never got over 65%. Even with all the mail-in ballots on the last one, they were at 65%. They never got over 65%. I think that's what he said. Listen to the podcast. I'm going to put it in my link tree below so you guys can listen to it. But get out there and vote. That's number one thing. I don't care what you make in the market today. It's not more important than your vote. Your vote matters. If you think Biden has done a horrible job with the economy, vote Republican. If it's whatever. I have a cousin. His entire platform for voting is the Second Amendment. Entire platform. And he's afraid the Democrats will come and take his guns. And I tell to him, name one time anybody has ever said, we want your gun. You're a law-abiding citizen. We know that you're using it just for self-defense. We want to take your gun. No, nobody's ever said that. But they use it as fear tactics. Just like well, I shouldn't say this. The Democrats use fear tactics that Roe versus Wade was going to be overturned. Well, guess what? It was overturned. So your vote matters. It wasn't just fear tactics. Believe the parties when they say what they're going to do. The Republicans said they wanted to overturn Roe versus Wade, and they did it. So, again, doesn't matter what my politics are. I don't care. Just get out there and vote. In fact, if you don't vote, don't listen to my podcast. Make time. And all 8 of you that are currently watching, I think there's about 20 people that watch at certain times at live. That's what, there's people in and out, I guess, of the live. But if you guys were watching, listening, doing whatever, shut me down and go out and vote. By the way, Target is up 4.86%. You want to see a good chart. And it's going to cross. Let me see. Did it cross up? Crossed up. You're going to get it right there. Okay. Let's look at it. Oh. That's an error. That's got to be an error. TQQQ. Jesse, did you get into TQQQ? I think you said you did. 2080, and it lost all of its muster. Market's just losing its run. The VIX is coming back. Amazon was up 4%. It's only up almost just under 3% now. Let me see what my portfolio's up. 2.04%. So we've come back a little bit. See how it was trading? TQQ under that. Okay, let me go to Active Trader Pro. And then I get this best adult dating site. Man, I wish I could. Let me see. Hide user on this channel. And then report. Pornography. Report. Boom. Boom, boom, boom. Down 12%. Good job, Jesse. Let me look at IBM for you. And then I'm going to post. I'll stay on, but I'll post this. I'm going to post the podcast. I recorded it, and I got to get to posting it. And then I got to go out and vote. That's what I'm doing today. Stefan, IBM, yeah, it's ugly. Here's what you have to know about IBM. It's not a bad company. It's just poorly run. Their PE is 19. They've got a 5.43%. So you might be down 12%, but if you've held it a year, you've gotten 5% of that back. And the reason you got 5% of that back is because of the dividend. So you're really only down 7%. Year to date, you're down 9%. It's beating the S&P. The S&P, I think, is down somewhere near 23%. You're only 7% above your 52-week low. Your P is 19. Price to sales is 1.87. This one's tough because people like Stephanie, some folks on CNBC, they love this one. I've never seen this one. They bought Red Hat, which was a cloud division, and I liked that purchase for them, but they never managed it correctly. And this is a weekly, and you can see the weekly, how it just, this goes back to 2017, where it was trading at 160. It's at 120 right now. It's a downward trending stock. If you look at the monthly, and we go back all the way here, see, it's capitulating here between 100 and, say, 150. And so I don't think that you're too young to have IBM, Stefan. IBM is not in your wheelhouse. Not until, look, they got rid of their dividend. Or no, that was all dividends. Their earnings just weren't in there. It's being hidden up by the earnings. They didn't get rid of their dividend. What the hell am I talking about? You're too young. Buy Snowflake. Buy Square. Buy Shopify. Buy Palantir. Buy Goldman Sachs. There's so many other opportunities for you, Stefan, that I think at your age you should be in. IBM is not one of them. If you want to hold IBM, I'd tell you buy XLV, which is or not XLV, buy XLK, is it? I think I own, technology. Just buy XLK. Don't hold IBM. Buy XLK. It's technology. Here, let's look at that one. We'll go back to the monthly on XLK. Look. Don't buy IBM. At your age, you should be taking some chances in the Snowflakes and the Palantirs and things of that sort. In the Meta. The Meta, again, that's a stock that I think is going to move up once they get in Roblox. Roblox is probably even better than Meta, to be honest. You should be taking chances like that. If you're in IBM, you're in it for the dividend, and you're sitting there and you're just living off that dividend at 5%. That's what IBM was there for. That's what GE was there for. That's what the Nifty 50 were there for. They were to provide dividends, not for growth, and you're too young for that. So T. Rowe Price, get the F out of there. Throw it into XLF. IBM, get the hell out of there and throw it into XLK. Those should not be short-term buys for you either, because those should be long and buy and hold on those. And if you want to just buy in a cheap S&P 500 rather than going into XLF or XLK into the sectors, just buy VOO. Look at VOO. We had a cross up here at 338. You got tons of gaps. This is just a Vanguard S&P 500 ETF. Do you have gains that you can sell it against? It's in a brokerage account, I'm assuming. But, I mean, what are you going to do? Hold on until IBM comes back? Let me see. When's IBM's earnings? Hold on to it through earnings. October 19th. If it dips, see, it's breaking that 50-day right there, that blue line. And see how when it broke through there just October 5th, how it just crashed down? That's what I'm afraid of, is that we're going to take a leg down in this market and you're going to have an even bigger loss. But again, it's only $2. You're probably not going down to 120. I'd hold on to IBM through earnings. Just take a chance. They may have some good news. Probably not, but they may have some good news. I would assume that this one would probably be more attracted to, let me bring this volume up here. So you're building a volume shelf right here around 123. I think this 127. You probably don't have that many shares, Zephin. So between 123 and 127, I can't imagine that there's that this one's going to move 10% on earnings. But I'd hold through that earnings. And I think if you get near this 127 to 129 realm, I think you sell up there. But if this one's going up, Snowflake's going up double. If IBM goes from 121 to 125, Snowflake is a $220 stock. I'm telling you, it's just technology. That's why the XLF or XLV is a better one. Okay, let me go to Active Trader Pro. Hopefully that makes sense. Zephin, I don't want to lead you down a wrong path. I finally got that porn dude out of there. New episode, create an episode, browse. Desktop podcast 946. 1018, yep. There we go. Insert ad. How you guys like anybody listen to the podcast? I think most of you guys just listen on here. Lumen. I'll look. Let me post the podcast real quick. Oh. Wow, Salesforce. He's talking to the storeboard dude. That's who took an interest in Salesforce. He's going over on CNBC right now. You're up 10% on Salesforce, but it's still too fucking expensive. Interesting. I keep telling Rick he's got to go on YouTube Live and record this stuff too. Over the past 30 minutes, CrowdStrike is outperforming the NASDAQ 100. Fastly MACD line crossed above the signal line. I have all these alerts on Active Trader Pro. So, see on Active Trader Pro, it's behind my face. But CrowdStrike, CRWD, it's outperforming in the last 30 minutes. Look at that. Look at that. And you saw TQQQ has been going down. Look at that one. I think I bought in at 180 something though. Oh, what a moron I am. Wow, it's up 5% today. I should have added to mine. Let me see where it is. It didn't get a MACD cross up. CrowdStrike. I'm on. So what happened with the loan? It was my brother. He turned out to. He's got some money in the bank, not as much as I do, but he's got money in the bank. And I was able to get him a line of credit, not backed by me. It was backed by his brokerage portfolio. And we were able to get him a line of credit to extend him a few months. So I haven't had to take out on my line of credit. But the line of credit is what we kind of determined would be the best alternative. And what a line of credit is, so you guys know, rich people, banks want to throw money at you. So they tend to give you loans based on your portfolio and other things. And those loans are tax deductible, the interest is. So you can take out money and live on money. This is how Jeff Bezos lives. This is how typically, Elon Musk sold billions of dollars, will pay billions of dollars in stock. He didn't do it the quote unquote smart way. And the reason is he had to take a lot of money out to fund other ventures like SpaceX, like his purchase of Twitter, and all of that sort of stuff. So he needed money, and he couldn't raise that amount of money from the banks. They'll give him millions of dollars. They will not give him billions of dollars. So, but yeah, we were able to get my brother a line of credit. I don't know the interest rate that he got, but I think my interest rate was somewhere about 4% for my line of credit. I was able to negotiate it down. So I've got it sitting there, and it's not tax-free, Jesse. I'll still pay taxes. It's kind of, and I need to start this podcast to try and, because a lot of my podcast listeners and you guys on YouTube, you're younger, and I didn't know about this stuff when I was your age, but I just talked to my other buddy, Mark, who just kind of did this too. He's around 50 years old, and he just left kind of the workforce, and he sold 2 restaurants and stuff. So he's got some money in the bank. And both of us talked about, I don't think we've talked in 20 years, and we were like, God, we didn't know anything. But you live a rather expense-free lifestyle where, debt equals tax breaks, but if you don't make income, you also don't pay taxes. So I've talked about it on here. I work for Major League Soccer. When I sell in my brokerage portfolio, I do have tax events. I do a lot of trading in my retirement accounts, though. Those aren't tax events. So I don't pay taxes until I take the money out. Even if you trade in a Roth IRA, you've paid the taxes on the way in. You don't pay the taxes on the way out unless you take it out before you're 59. So I've got 7 years to go, but I've traded my Roth IRA to a significant amount where I can take that out tax-free at 59. This is where kind of the financial independence, retire early kind of helps, is that if you set yourself up and you kind of think about these things in your 20s, you can extend your low cost of living. If I were somebody, let's put it this way, the 4% rule. If you haven't looked up the 4% rule, look it up. Rich Dad is a good one. But the 4% rule is, say you have, I watched this CNBC Make It. By the way, these dudes are just, and these people, the women, the guys on there, they're just so arrogant. I hate it. They're smug. But this guy sold his company for $3 million, and he was, I think, 30 something. And he's like, I live, this is how I live on $200,000 a year. Well, he sold his company for $3 million. So the 4% rule is, if you take out less than 4% per year and you live on that, your actual nut or your nest egg should sustain you through the end of your life. So for instance, this is just for instance, on a $1 million portfolio, if you've got a $1 million portfolio, you can live on $40,000 a year. You shouldn't have to actually ever work again. Now, that's assuming that the market kind of stays in line and does things and blah, blah, blah. It doesn't always work that way, but that's the logic. With this downturn, there's kind of been a rethinking that maybe that 4% moves to 6%, but I personally don't live tax-free. I just live the things that I want, I've already bought, like a nice house, nice car. I take my dogs to the vet. I don't shop in expensive places. I do my grocery shopping in Walmart. I go to Whole Foods every now and then to splurge. I don't go out to eat. Maybe once or twice a month I go out to eat. When I hang out with friends, I'm drinking water. I don't drink alcohol. Don't go out to bars. I hike. I don't golf that much anymore, although I do take about 1 to 2 vacations, but I don't make that much money. I think my actual income is about $40,000 a year. So, and under $40,000 a year, by the way, look this up. If you make under $40,000 a year as a single person, under $85,000 as a married person, your long-term capital gains on any money that you take out, if you earned that less. So say, for instance, you earn $80,000 as a couple. Under $85,000 is the term. If you took out $6,000, you'd pay 15% on that $6,000 because you're basically over, your income is over $85,000. If you took out $4,000, $999, and your income is $84,999, you wouldn't pay any taxes on that $4,999. It's an interesting kind of thing. I like looking at taxes and understanding my actual situation. I try and live on that quote unquote $40,000 a year. I had enough brokerage money when I left the workforce that I had enough cash and stuff to live for a certain amount of years. So I kept the cash. I put it into bonds where it was making treasury bonds where it was making next to nothing, but I didn't care. At least it was making something. So it's kind of how I lived. But I need to start that podcast. Okay, what am I going to type this? We're going to type it Tesla. Tesla buy in on my algorithm. Market update. 10. And I'll look at that stock real quick. For you, Jesse. But we're just going to put in our notes here. Copy. Paste. Boom, boom. And I need to go over and look at another episode. Let me just post this podcast real quick. I'm not ignoring you. Yes, I do my own taxes. And it was one of the reasons why I switched to Fidelity, because high net worth people in Fidelity get free TurboTax. They pay for my TurboTax. So, we're going to take these. Okay. Oh, I don't want the bold. Charts. Check out the charts on YouTube Live. YouTube Live stream. Click the social links below. We're going to move this. Yeah, I do my own taxes. And by the way, I learned all about taxes probably later in life. A little too late. Because I made plenty of mistakes over the years on taxes. One good thing I did on taxes, and I think I'm out of the statute of limitations, is as a kid, I earned a lot of money. Let me just post this. Tesla. Oh, come on. Tesla, Roblox, or BLX, stocks versus long. Oh no. So. go out and get my trash cans. The wind here in Atlanta is crazy right now. And I hear my garbage can being blown over, all over. I didn't go over Roku. Goldman Sachs. Meta. BAC. JP Morgan. J&J. LMT. Let's type in LMT. LMT. Tesla stocks. CRM. Okay, and I've just got to put the dollar sign in front of these. ARK. Oh. ARKW, Amazon, Snowflake, NVIDIA, Skyworks, DocuSign, Pfizer, Illumina, CEG. Oh. We're going to go Docu. We're gonna delete some of these. And then SO. DUK, US. Oh, stop. I need one other taken out. There we go. Okay. Tweet. Oh, the neighbor is turning over trash cans. So nice. I tweeted that out. Okay, so we've got that. We've got that. Let me go back to Safari View. Okay, LUMN. CrowdStrike. CrowdStrike, by the way, is going to gap up. Lumen Technologies. Yeah, buying here at 650. You've run up to 704. Earnings are coming up November 2nd. The MACD's running. It's not quite up towards the oscillator. The RSI is at 47. I think this is a ARK favorite, but it's making money. Wow, do you really have a 14% dividend on this one? That's crazy. Fortune 500 dividends, Insider Monkey. Bum, 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 bum. I hate these things where they say our. International Business Systems. Here's IBM. Hey, Zephan. I think I hear my dog crying. Hold on 1 second. You okay? What's wrong? You want to go under there? What's wrong? What's wrong? Come here. Come on. Sit down. Sit. What? What? I don't know why you... What? Why are you crying? I know. I love you. It's okay. I know. Good girl. No. Come on. Come here. I'll put you down in here. Come on. You want to sit next to me? Dog has seizures. Zephan, there's your IBM. There you go. Sit down. It's on this article. Walgreen Boots. KMI. Lumen. Neutral rating on Lumen. Lumen reported weak organic revenue growth and guided more weakness for 2022. We expect revenue growth to kick back in towards the end of 2022. Huge FCF coupon helped offset value decline. Boy, this one looked good. Let me see. Let me pull it back. You've been beaten down. Do you want to go under? Okay, there you go. I'll put you under. There's no bet under there, but you can go under. Jesse, this one might be it's been beaten down. Here's the problem. And you never know. Now, here, when I look at this, the PE is 3.55. Let me see if they have a comparison in Fidelity to see if I can MN, there we go. Profile. I guess the mobile app doesn't have the comparison tool. Option chain, trade options. It doesn't have the comparison tool. Why dividend matters. It's a great dividend, though. It's a technology company. CenturyLink Brands. Oh, they bought CenturyLink. Okay, I know this company. CenturyLink. Oh, what a shit show that is. Yeah. This is like Charter. CHTR. So here's Charter. Lumen is similar to Charter. Let me go to the weekly. Remember that chart? Charter's just gotten it a little later than Lumen, but they're starting to lose subscribers. Wireless is going to take over. Your SpaceX, with Starlink. Yeah, I mean, look at Charter. Charter's down at the bottom side of this thing. If you think it's coming back up to 60, you're crazy. You're out of your mind. I worked for them, by the way. Oh, by the way, I have some red. AMD is in the red. Baba's in the red. Devon's in the red. Ethereum, GBTC, J&J, Meta, Oxy. Oxy's getting to the point where I probably should sell it for a little profit. ODV. Let me look at ODV. Lumen, take it for the dividend. ODV. This is one of your freaking... No. ODV is one of your gambling stocks, Jesse. Hasn't had a MACD cross up, but it's fairly clear that a bottom at $4 of recent time, but my guess is this is a SPAC. Let me look. It's got to be a SPAC. No, maybe that's not a SPAC, but it's new. It's just close to that $10 mark, which made me think it was a SPAC. I mean, look, they're not making money. The price to sales is 15. Stay away from this one. You have plenty of other places to make money. Okay, I'm out of here. I got to go vote. Vote. Hit me up on the socials if you guys have any questions. Remember, if you make money, tip me. Thank you, Jesse, for the tip, by the way. I really appreciate it. And thank you, everybody else, for listening. And any of the supporters. I posted the podcast, posted to Twitter, so I'm all good.